Tonight, we welcome Rick Bennight. Liam and Rick will discuss how to determine which is better for your client, the IUL or whole life. Any questions? Ask anytime during the live, and Liam and Rick will answer them during the Q&A portion of the show.
Well, I tell you what, my son does the intro, so of course there was Rick Benight's coming. Oh, and Liam will be here to do whatever. That's how he does me. He does me that way all the time, Rick. I'm telling you, hey, I know that you are in lovely Colorado, yes?
Correct. Well, thank you from beautiful Colorado. A little cold, but always nice.
Hey, we had Joe Clark on a couple weeks ago. He's going to be back in 2 weeks on the Roth conversion for part 2. He's going to be coming on. He's one of your guys out there, and we've all been together for 20-some years. I know you've been helping us out in our design team area with the life insurance. That's why we brought you on tonight. But let me start with a couple of a little bit of house cleaning, and then we'll get right into what everybody wants to hear tonight, and that is the whole life or the IUL, which is the best one. And maybe there isn't really a best one, but we're going to find out the answer to that question tonight. But before we start, I wanted to give everybody every week I try to give them something big. And I know, Rick, I know you're excited about the Babe Ruth bucket system and all the things that we do for the agents. 7,500 of them now that we're training, and that's going to grow. We're getting ready. We're working with some groups. I got matter of fact, the guy coming on next week has 35,000 agents that he does a lot of work with, and he does a great job. Him and his wife, Dave Ellie, and Dave and Ellie Denning, and they will be on next week. They've got a lot of cool things to do, and they're going to be awesome. So we're trying to catch up with people like that, but they do marketing and stuff, and we just do that boring education stuff. So, and I try to keep it as exciting as I can. But what we're going to do, and I told you earlier that when we talked, we were talking to, Mr. Hegna last week, Tom Hegna, and Tommy was saying that, one of the things that we offer is a paid membership, and it's $97 a month. And Tom was saying, if you can't afford that, you shouldn't be in the business, right? And we have a design team that comes with that. You're part of that for people that are doing case design. We have Heather and Drew's groups are out there. I know, I think Drew's group is Viral Roots. They do marketing and stuff. Heather's is InsureBot Solutions. She's got a pretty cool thing. Reminder Media, Mr. Saska and their group, and Luke, they're one of our sponsors, and they're on the paid side as well. And Coaching Empire, and of course, Tom Hegna just came to be a part of our mastermind group last week, and I joined him in Puerto Rico, and we had a good time out there. So that the thing that I wanted to announce tonight to the paid members is that we are going to start having office hours. And I told you about this as well, Rick, because I'm trying to get gentlemen like you to agree to come on there with us during the time. But we're going to have 2 office hours starting in April. It'll probably be on the Tuesday before the show, so I don't have to go to 2 different. I'll just stay at my location, do the 2 hours, of the office hours. But our office hours for coaching is going to be mastermind only. So what that means is when you come on, if you're a paid member, you're going to be able to see you yourself, and we can do case design with whoever's on there with us, the paid members. We might have 10, 15, 20 guys. We have little squares like the Brady Bunch, right? And everybody gets to talk, and everybody gets to ask a question. Or, in some cases, we might have Tom Hegna on with us. We might have Phil Graham. Phil's got that new policy out where you don't need a death certificate. It pays within 24 to 48 hours. So he might be on there. So it's real exciting, the things that we're doing for our paid members. Of course, we have every single live on the paid site. We have training and coaching. Every week we put something new on there. So it's real exciting. We'll definitely be having this on, but I know I'm going to have you come on the paid site and do a little bit more detailed on what we're talking about tonight. But I've probably overdone it. We get 30 minutes. I took 4 of them. And so I'm going to get you going with a question. I'm going to get you started with a question, and then you just let it go. We got some slides as well. And if anybody's watching and they want to ask questions, we'll answer those maybe as we go, depending on what if we have it. Sometimes we don't have any, Rick, and we just call it a night. We do this on replay and we do it live. So if you're watching live, make sure you hashtag live. And if you're watching replay, hashtag replay. Now, if you see some value, Rick always wants to be patted on the back. So put hashtag value so Rick gets to do that. And Rick, Before we start, and before I ask you the question, in fairness, give us a little background, because we didn't do the greatest introduction of you, where you come from, how long you've been in the business, and how we got together, and why we're going to do great things for our agents. You have to be in that order. You can talk about how great we are if you want to start. I don't care.
Sure, Liam. Well, hey, thanks for having me on. I really, the Babe Ruth bucket system for agents, I think, is a great system. I think there needs to be more systems out there like this for all the support and help you give agents. But if there was something like this when I was starting out, who knows, it might have been a game changer for me. But I started my career in the life insurance business back in 2001 with Mass Mutual as a career agent. And I did that for several years. And since that time, I've been at about every single level of this industry you can think of, from frontline rep to recruiter to sales manager, director, regional vice president, and everything in between. So all levels of the life insurance business. This business has been great to me. I love it. I love talking to new agents. I love helping people get started. And
now you're the head of the Babe Ruth Bucket Systems life design team, and you're the #1 guy that helps them. Don't be modest. That helps them if they need case design. Yes.
Well, case design is one aspect of it, but really even more than that, we want to talk about what are we trying to accomplish? What are the client's needs? What are the goals there? Because a good design with a bad fit still doesn't work. So we want to make sure
that's what we're going to be talking about tonight, right? Which one fits with where? And let me do this. Let me do this, because I know you're just like Tom Hegde. You could talk for hours about. I know what you've done in this industry, and that's why you're on this team. And a lot of people aren't on this team because they're not of any value. And it's not being mean. It's just we want to bring the best people that we can out here, and you're one of those guys. And I know you network with Joe and BCA and all that, and that's some great stuff. But I'm going to start with a question. We're going dirty, and we're going to get mean. We're going to get in here. I know a lot of people. Some people love the whole life. Some people love the IUL. Some people like term and invest the rest. Tom Hegna said last week that the IUL, in all intents and purposes, is buy term and invest the rest. But again, it goes back to structure, yes? And so,
correct.
So what my question is whole life, and here's where people make the mistake. Now, I like to use in my book, in the Babe Ruth Bucket System, in my book, I'm the only one that covers the 3 options in infinite banking. One of them is, I call it participating whole life. Now, people say, what does that mean? Now, I like to bring up a specific life, right? That's a participating whole life. And then I like to compare that maybe to a Western Southern, right? A Satchel pulling, it's just not I like to say it's a more powerful whole life. It's still whole life, yes? But I just do this. So that's in the book. I talk about the IUL. Then I talk about the global UL, which I don't think exists anymore. I still own it. I bought one way back when Voya sold those. I don't think they sell them anymore, but in 2015 they did. But here's the question, and here's what people get a misnomer about: is the whole life, or the participating whole life, however you want to call it, and the IUL is the only difference. The way that the premium's fixed on a whole life, and the way that it goes up and down, or you can pay it sometimes, not pay it with a UL, or is there more to it?
Oh, that's kind of a loaded question there, Liam, because there's a couple of different things in that statement. Generally speaking, on a cost per 1,000 basis, you would tend to think that whole life is more expensive. And in the beginning years, it is. But what some people don't realize is in any UL contract, whether we're talking IUL, GUL, whatever it may be, internally, there's an annual renewable term. And as we get later in life and we age, that cost continues to go up. So while the IUL may appear to be less expensive in the beginning, once somebody gets to 75, 80 and plus, those internal costs on the UL contract tend to outpace the whole life by a pretty good margin. So the answer, like a lot of things in our discussion today, it really depends. And so it depends on how the policy is designed. It depends on the client. It depends on what we're trying to accomplish. So that's what I'm here to talk about today. And so let's go ahead and get started here. And if we can bring up those slides there.
Tell them which arm is mine. My arm is on the right of the screen. That is my arm. 30 years ago, Rick.
Well, it's a debate out there, but let's first take a look before we kind of dive into the differences between the two policies and which one might be better or worse. Let's just take a look at what sells in the U.S., which is the most popular, and maybe that gives us some ideas about it. So if we can advance to the next slide. This shows for 2023 the sales of whole life, IUL, term, VUL, and straight UL as compared by total premiums paid. So you can see there that whole life is about 39% of all premiums sold, and this is for new business in the United States in 2023. You know, if you take the total value of the UL products, IUL is 24% plus the 6 for the UL, that's 30. That puts us up at about 42% if we include the VUL. So while whole life is the number one seller, all UL types outclips the total premiums paid in the U.S. in 2023. And so we can talk about why that is. There's probably a couple of reasons that maybe a lot of people out there already know those. You got your 4 big mutuals that those advisors are obligated to sell whole life. That might have something to do with it. You got a lot of carriers that maybe do juvenile policies, think Gerber, stuff like that. That might have something to do with it. So there's a lot of things that go into that, but I thought it would be interesting to share with everybody just where the premiums are flowing to in 2003 when we're talking about life insurance.
Let me tell you the biggest thing on the graph that sticks out to me, right? For as much as the blowhards say, buy term and invest the rest, look at the number.
Right. Exactly. Yeah. I mean, term is a 19%.
80% say you're wrong. 80%, if I'm looking at it right, tell the blowhards, the great gurus, and we all know who they are, that they're wrong. I mean, that right there tells you, and tell me I'm missing something.
Oh, you're exactly right. You're exactly right. That's what maybe you hear, but until you dig a little deeper, you might believe that. But once you kind of understand how these policies work and all the benefits that come along with a permanent cash value policy, I think most people will agree that's the way to go, at least with part of their investment.
And you know who it's so funny. The greatest naysayers are the biggest buyers. The banks buy more permanent life insurance than anybody on the planet. Am I wrong?
No, you're correct. Bank of America is the #1 holder of whole life insurance in the country. And there's reasons
like BlackRock owns all the crypto, right? I mean, yeah.
Exactly. Yeah, they're telling us one thing, well, they're doing another. That doesn't sound familiar, all right? All right. Well, let's just take a look here. Really, what I wanted to do when we dig into our comparison here, I wanted just to kind of show, sort of compare and contrast some of the differences. So in our comparison here, I took a male, age 55, put him at a standard rate. We assume he's got $10,000 a year in premium, but he only wants to pay that premium for 10 years. Now, on the IUL, I did make a couple of assumptions. One of them was I put the annual index return rate down at 5%. I know a lot of IUL companies will allow you to illustrate at 6.5, maybe even as much as 7. But just to kind of keep it on an even keel, I put that at 5%. And then we ran 10 years of premium at $10,000 each, and we just kind of let us see what it came up with. Now, just a couple of clarifying points. This is based on a participating 10-pay whole life contract. This is no blend. It's all base premium. And it is a guaranteed 10 years, so guaranteed level contract. So we'll look at it. So first, if you look at the guarantees up here, you can see that based on just the guarantees, the worst case scenario, that whole life contract is guaranteed to age 121. Now that's assuming we don't take any loans, and there's and we pay the premiums for 10 straight years. Whereas on the IUL, our guarantees only last 22 years. That's a big difference. And if it's a death benefit we're concerned about, whether it be for estate planning, wealth transfer, estate tax type stuff, that's important. So that's one of the differences we need to know. And the same thing on the lapse. You can see the whole life runs to age 121. Based on the current scenario, the IUL run to age 100. So That's assuming that those interest rate at 5%, the index returns are 5% annual, and that policy will run to age 100, which is good.
Well, and let's be clear. Let's be clear, because I know there's some people saying, "Well, it's pretty obvious that whole life destroys it," but you got to pay attention to, and this is where they make the mistake, especially a lot of part timers. And I tell them all the time, when I coach sports at any level, high school, pee-wees, whatever, I tell them, if you cheat yourself, you cheat the whole team. And so what happens with these part timers is they go out and they don't understand what you just said. And what you're saying is, if they're not overfunding the IUL, this is what happens. Yes?
That's exactly right. And, there's a...
You know that, Rick, but I wanted to make that clear, because there's a lot of levels that watch with the Babe Ruth system. Some of them are brand new agents, some of them are veteran agents. But that being said, I just wanted to clarify. I wanted to make sure we're right on the target on that. Yes?
Right, exactly. Well, and typically, just for everybody out there, typically when I'm looking at IUL, if I know I have $10,000 in premium or $500 a month or $20,000, I want to see that target at 50% or thereabouts of planned premium. So if I got a $10,000 premium, I want my target to be somewhere around $5,000. That ensures me that I'm putting enough money in that contract in the early years and letting that money grow. So in those later years, when that yearly renewable term really starts chewing into that cash value, I got plenty of cash in there to make sure that policy runs until I die, or at age 100 or better, until it endows.
And let's throw a curveball in here. Now, what if I have a whole life and I want to overfund it? Is that possible?
It is. Yep. Now, this policy
is limited. Is it possible but limited?
So,
I know the answer. I'm just trying to.
Yeah. So, how I would describe it is, it's really limited only in the amount of budget you have, because what we have to do in that scenario is we have to buy a term rider, whereas our base policy, if we got $10,000, but we want to put in $20,000 in the policy, we got to buy a term rider that increases the death benefit. That allows us to overfund the whole life so that we get a greater, faster cash value accumulation. But there is a small cost for the term.
That can benefit, because what I used to do, and I don't sell anymore, but when I used to do the IUL, I would train people how to check the box. And check the box was every single IUL, I added a 30-year term every single time I wrote it. Not because I wanted policy count, but because I knew that at some point that extra money would help, because I'm trying to sell and try to solve for making a retirement plan. Yes?
Correct. Yep. That's a great strategy, and that works.
Do that necessarily by selling them the target of what the policy needed to be, right? And so I always like 20 or 30 years. I didn't want to do anything less, because I also knew that at some point, if they weren't insurable, they could always convert that. And if they couldn't, I'm sure the children would, because they want to keep that policy in play. And we got a little bit of a scenario on that we're going to talk about here in a little bit, on a case that we did that turned out to benefit that situation. So we're back to the premium. Let's go here. So on the original quote that you have, and we look at the cash value difference of 417,000 versus 1,000, kind of explain how that worked out.
So what that is that's the cash value at age 100, right? Now, do people live to 100? Probably not, but there's a percentage of the population that will. So I wanted to see, if somebody really lived a really long life, what kind of cash value they would have. And that's a big difference. That's probably the extreme. If we jump over to the other chart there on the bottom, that's probably a little bit better value, where let's check on the cash value at age 65. Right, so we started at 55. We paid 10 years worth of premium. Now, you can see here that our cash value at 65 on the whole life is 106. But look at the IUL death benefit amount. The IUL death benefit is 200 compared to 113. So for the same $10,000, we're getting 87,000 less in death benefit with the whole life. So that's
initial. It flips over time.
Yeah, but that goes back to to your first question. Whole life is more expensive. And you might think that in the beginning, because in this scenario, we're like, wow, it is more expensive. My 10,000 is only buying me 113,000 versus 200 with the IUL. That's where the perception comes from. But if you carry that out to a logical conclusion, you'll see that in the long run, the whole life is not more expensive.
And again, that's why you might want to add a term to it or add a term rider. Now, here's and I'm not trying to. To me, I like the IUL because of diversity, because of what all you can do with it. I'm a big fan of it. But I also know that when we do stuff, or our clients, come to you, you're good at saying, hey, let's look at both, and let the client make the decision. Yes.
Yeah, so there, and that's a good point. I'm glad you brought that up, Liam. Really, because what we want to do is we want to make sure that whatever we offer the client, whether we offer them both or one or the other, we want to make sure that that product fits the client's needs. So a quick example of that would be the guy that has $10,000, 55-year-old. He's like, yeah, I can do $10,000 this year, and I feel pretty confident. But what happens if I get in year 6 and things change? I have an expense come up, or I lose my job. Well, on the whole life policy, that is very rigid in those premiums. So if somebody needs, they already know they're going to need flexibility at some point, the IUL excels when they're providing flexibility to the client. So that might be the determination that, yeah, we like the whole life, but we need the flexibility of the IUL.
Well, and I think you have to understand, we all do, circumstances changes all of our lives. Yes.
Yeah, exactly.
So you're rolling the dice. You're taking a risk. Now, let's say that somebody does get disabled or whatever, and maybe you did. I like premium waiver. I love that. I think you can still put those on policies. I think you should put those riders on. We're all worried about all these other little fancy riders, and I think you should have. And I think whole life, if I'm not mistaken, has terminal illness and those things as well. And I think those things should be on your policies as well. But I think the premium waiver is a positive. I don't know. I've been out of selling since 2009. Can you still do premium waiver on an IUL as well, or only the whole life?
No, you can do premium waiver on both. Exactly. That's available.
Not overly expensive to add that. Yes.
A couple of maybe a point to a point and a half. So on a $10,000 premium, you're maybe looking at $100 to $250 a year.
One of the things that we do when somebody does get an IUL, I always try to tell them, here's what especially people that think that they're getting money back every year, right? I love that argument. My one son is big on that. I got 6 kids. I get this big pile of money, and they're using his money all year long, and they're making no less than 5%. But whatever, he likes it and he enjoys it, and that's exciting and good for him. But I told him, I said, listen, when you do all of that, when you get let's say that you get a $5,000 check, if you could just take a third of that every time that comes in and dump that in your whole life or dump it in your IUL, and you just do that for 10 years, Rick, the numbers are astronomical. Am I wrong?
You're correct. Right. And that's the point of it. It's the long-term growth of those things. One of the differences when we're talking about the whole life IUL, you have a greater upside potential because the returns are linked to an index. Some caps right now are as high as 10, 11, 11.5%. Well, that's great. But you also have that risk that there could be some years that are flat or maybe 2%, 3%. If the market's negative, you don't lose any money, which is a great benefit, but you might not make anybody there. So the other side of the coin is the whole life, where you have a guaranteed compound uninterrupted growth rate. And what I mean by that, all good whole life companies, most of them have been around for 100 plus years, and they've been paying dividends every year since 1910, 1905, what have you. And so it's a very predictable rate of return. It's going to be nothing sexy or fancy. It's going to be between 4.5 up to about 6.5, maybe 7. Consistent, it's the tortoise and the hare. It's not going to run as fast, but sometimes it'll get you there safer because of the consistency over time.
Well, and I think too, one of the things that, one of the things that I like, as a matter of fact, I was doing a coaching call with one of our paid members today. All of our paid members get 15 minutes with me every month, and a lot of them take advantage of that. And a lot of times it's case design or questions. And one of the gentlemen was doing a 10 group dentist and a 20 group some other company. And I said, do they have a 401k? He said, well, no, they don't. Now I call these, and I have them in my book, and it's copyrighted. I call them the TIRA, right? Or the Babe Ruth bucket. Now the TIRA, the reason why I named it that is because it sounds like IRA, right? IRA, TIRA, right? Well, the TIRA is a tax-free index retirement account. That's all it is. But I tell them, I say, now listen, now when you're doing these group things, one of the things that we try to tell them to do, and I'm pretty positive you can do it with either one, the whole life. I'm sure you can do payroll deduction and you can do the other. I said, but the problem that people are making is that there are two reasons why people do the 401k. One is convenience, right? I'd like to say the other one's ignorance, but I won't say that. But one of the reasons is convenience, and the other reason they do it is because they get matched, right? My employer matches me, right?
Sure,
so
that's great.
What I do is I go in. Let's say you're the owner, you're the dentist, and I say, Rick, we're doing a buy sell, a key man thing with you and your partner that are dentists, right? You've got 10 other employees. 6 of those are dental hygienists. 4 of them are lower level employees. But how you don't want to put a 401k in, but you want to give them something. What if we gave them a payroll deduction option where they could get a whole life or a universal life, cover the family? But let's do this. What if you match that up to a certain percentage, Rick, and then in return, you would have them considered as a key man insurance. Now follow me here. So you give 5%. Let's say that the dental hygienist cost you $25,000 to replace. Then he would get whatever that percentage. He would get 25% of the life value as long as they worked for him. Right. How powerful is that? Now all of a sudden, even this lower level employee that's cleaning the building, it may only be $10,000 to replace him, but he's got him protected. You see how that works? Is that not powerful? And you can play that with either one of those. Yes.
Oh yeah, that's a great strategy, Liam, and I'm glad you brought that up. I think what people are missing the boat on a lot of time is whenever they're talking about benefits, they don't think about life insurance first, because life insurance can be great for business owners, great for the employees, can really accomplish a lot in terms of business, whether we're talking key man, we're talking buy sell, we're talking retirement savings. There's just so many ways to use life insurance when working with business owners. And, I encourage anybody that has an opportunity with a business owner to reach out to Liam, reach out to me, because there's lots of strategies we can use and really talk to that business owner about things they're not hearing elsewhere.
Well, and we used to do 15-minute lunch breaks seminars. I did them all the time. AK Steel, whatever company. We'd go in, they'd give me 15 minutes. They were all having a bite to eat, and I would tell them. And I would go in and I would do the benefits meeting when they would come in. All the wives would come in, and I would tell them, listen, don't give your wives a dime when you die. And I'd get apples thrown at me. I'd get booed and hit. And then I would explain to them what you already know. If you don't do that, then you've just bought the most expensive term policy in the history of the world. Yes?
Right. Yep. Great idea.
So I tell people, why are you not going back into these companies? That's what we did for a living. We would go in there. They want you to come in and educate their people. HR's not going to do it. They don't do a damn thing. And how many times does the 401k collapse? And you only get once a year to tell them to put it into cash. They don't call you up and say, hey, in 2008, what was it, 60%, 50%? People lost their ass. And I guarantee you not one of those people got a phone call by HR and said, hey, move that over to cash until the storm stops. None of them, right? No. And here's my biggest question when I'm going up against a 401k guy or anybody. Where's the money go, Rick? Yesterday, I had $200,000 in my 401k. Where did it go? Google that, Rick. Google it. You know what it says? It virtually disappears. That's the answer they give you. So you're telling me 2 days ago, I had $200,000 in my account. I've got nothing. And you're telling me it virtually disappeared? And now they want to go to digital money? Oh, I can't wait to see how that's going to work.
Yeah, exactly. Think about the consequences of that.
Rick, I'm retired. People say you don't have nothing to give anymore. What are you talking about? I still know. I know more than I've forgotten more than most people are ever going to learn.
Well, that's two. You bring up 2 points there. One, if you're scared about the market, the whole life is the way to go. If you got a client that's thinking, man, I can't take another downturn, I can't take another market correction like happened during the pandemic. I don't need a great return, but I can't lose any of my value. That screams whole life. Consistent returns of about 5%. We know the money's going to be there. It's going to grow annually. Whereas if you have somebody that says, hey, I'm young, I'm going to swing for the fences. I want to see what I can do with this. Well, that's the easy telling you. That right there is a IUL client. He's looking for an index with a high cap 100% guaranteed participation, and something he can pump a lot of money into and really grow that thing. So those are good clues to tell you which one might be a fit for a particular client.
Well, and let's. I want to finish up on this group thing because I think a lot of young agents out there, maybe even some veterans, are missing the boat on group sales. I mean, I did a ton of it. I could go in, I'd have 45 people, and I'd write all but 2. I mean, it was like fish in a barrel, right? It was easy. But here's the one thing I want them to understand when you're doing the group sales. And again, you have to help me because when I started, doing consulting in 2009 and then, own the agency, and I haven't sold for years. You got to help me and make sure this, can you still do this? But when we did the group sales, because it was a group, we had a little bit more lenient on the health questions and stuff and on getting it issued. Is that still the case?
That's what it is. So some of the group plans are still out there. Now, there's not as many as there used to be. There's been some consolidation in that industry, and some of those carriers have gone away or are no longer offering that product. But yes, you get guaranteed standard issue. So if you have a group of 10 or more, guaranteed standard issue, which is great for those people that might have health concerns, might not be able to buy it on their own. And if you're dealing with the right carrier, those policies are portable. So you got that 55-year-old person who works till he's 65, and now he has no other life insurance but his group policy. If you sold the right policy to that group, he can take that policy with him and continue to pay his premium payments, and he has a life insurance policy he can keep for the rest of his life, which is a great benefit. And you're right, I don't think enough people are talking about that, and there's always opportunities for people who think they can't.
But all you need is one group sale a month, and your career's over. I'm telling you, we did $10 million a year, Rick, and that was back in the 90s. And I keep telling people like, oh, you did not. I'll show you all my damn plaques. I got plaques in here with $790,000, and they're like, oh, that's a good year. It says for the month, Rick. It doesn't say for the year. Read the bottom line, right? Who's that? Stone Cold, the bottom line, But anyway, and that's what's exciting, I mean, Drew always teases me. You got to tell everybody how great you were. I don't have to. You can listen to us, and we know what we're talking about. I don't have to. What my friends say, your plaque and a cup of coffee is all it's worth anymore, right? But back in the day, it was exciting that we won those, and we were, we were the heroes. And I've been the top dog, and I've been the guy chasing. But I want to finish with a story that we did together. Is there another slide? Did I miss it, or is that just a close?
No, I think there's one more, just kind of a wrap up.
Okay. Let's finish with that, and then we're going to finish with a case study that we did, and then we'll answer some questions. So let's finish with the slide.
So which one is the best? Well, it depends. It's always a non-committal answer. It depends on what the client is trying to accomplish. But other factors to take into consideration are the age and the health of a client, the premium budget, and how long they want to continue paying premiums. And do we need a death benefit? Or is it focused on wealth transfer, estate planning type thing? Or are we looking for cash value, bank on yourself, a tax-free retirement type strategy? So those are the things to consider. And so whenever somebody calls me, whether it's Liam or somebody in his group or somebody else, those are the things I want to know before we design the policy. Because if I know those things and I have an idea of their budget, we can put something together that meets everybody's need and helps the client accomplish their goals. And that's what we do day in, day out. Try to help advisors help more clients.
All right, let's do this, Rick. I got one guy. I love this guy. Brian's having a cow. Brian's like $800K a month. One of the guys that we work with Tyrone is Al Casedo, and his worst guy is making $1 million a week. I think $1 million in sales a week. So I think they're the best guys are doing. What are they doing? I think 4 to 10 million, ridiculous number. But I want to clarify that it's annuities and IUL. Now, in my case, our average IUL sale in a seminar was $25,000 target when I did seminars. That was my average. Okay? My annuity sales were a month or a week, whatever, because here's how I did it. And Brian, I'm talking to you. Here's how I did it. I did 2 seminars on Tuesday. I was in Tyrone's first annuity at a university class. That's how old I am. I don't look older than 57, but that's how old I am. But I tell people say not a day over 56, Rick. But anyway, so when I went to Tyrone's class, I remember when him and John Naylor, they would go in on a Tuesday. They do a 12 o'clock seminar and a 6 o'clock seminar. Thursday, 12 o'clock, 6 o'clock. And they would do 8 of those a month, right? And so when you're doing that kind of volume, I mean, you're getting less. So what I did was I did a Tuesday, Thursday, 4 of them. I didn't do any the next week. I always got to make it my way, right? Because the next week, I would go out and I would close all the people that came the prior week. If I'm doing seminars, I don't have time to see nobody, right? And so I just did 8 a month, and instead of doing 16. And so that's how I did it. And Brian, we were doing a ton of annuity stuff. My mentor, you can look him up, Bill Nelson. He's gone now, but Bill Nelson is the first person in history to do $1 billion in premium in 1 year. That was my mentor. He worked for Voya. Back then they were ING. He passed away a couple of years ago. He's good friends with Harry Dent, who was at our mastermind in Puerto Rico. You may know Bill Nelson's name through the woodworks, but Billy was the best. There was nobody. And I sat down one time, and Brian, I challenge you to do this. I sat down and here's how I do it, Rick, and maybe this is how you did it when you were the hero at Mass Mutual. What I do is I break it down to little chunks, right? What do I have to do a week to do what I got to do a month, to do what I got to do a quarter, to finish out what I got to do a year? Now, I never got the opportunity to chase Bill's $1 billion. I never got to do that. But I did, and I wish I could find it. I did calculate, and it's doable. It really is doable to do that kind of premium, but you got to work. You got to do seminars. You got to do webinars. You got to do the stuff that brings people in. The reason why, and Brian, and I'm not just picking on you. I love your enthusiasm. Here's what you got to understand. And Rick, you can agree with me on this because I know you did the same thing. I would rather talk to 35 people in an hour than have to go find 35 people in 4 weeks.
For sure. Yeah, exactly. Just being able to present to that many people and get your name out there. I mean, there's not a better way to market out there, right?
And I'll tell you what I learned to do, and I'm sure you did the same. I qualified. I would call you up and I'd say, Rick, listen, I got you coming to my seminar. I got 3 questions. Are you on a fixed income? Yes. You're not coming, Rick. I don't need you to be there. You're not. I was bold about it, right? No, I'm not on a fixed income. Okay. Do you own your own home? Yes, I do. Do you have an advisor? Yes. Is there anything that advisor doesn't do that you'd be willing to let me play with? No. Then don't come to my seminar, Rick. Right. And I would have, instead of 40 people, I had 12. But the 12 people that came, Rick, were buyers.
Exactly. I like it.
There's your difference. So if you're looking to scale and you're saying, oh, can you really do that kind of numbers? Al Caseda's got a great program going right now. It's about it's an investment of $6,000 to $10,000 a month. It's a lot of money. But if I'm making $80,000 a month to $200,000 a month, I'll spend $8,000-10,000 every time, wouldn't you?
Of course, yeah, so, and you can scale that to however you want. I mean, even if you're not making that 40, even if you're making 40, I mean, I think the average, on the low end, is 40,000 per seminar that costs you 8 to put on. So, I'm no math whiz, but that makes sense to me.
Yeah, and I think and we've got, like I said, that's why I do the books, right? And that's why we do the brand. These books are just business cards. Am I wrong? It doesn't have to be a bestseller. It's just got to have your name on it. Yes.
Builds credibility, shows you know what you're talking about. Exactly.
Yeah, and then I'm gonna give Saska loves when I plug him. I got his magazine here. These magazines are very powerful too. Yes. Just keep yourself in front of people. So we got all kinds of strategies. Again, if you're a paid member, we can help you get to that scale, to that thing. But let's finish with a design case that we did. I called you up on the phone. I had a client that's a client of a friend, and I said, listen. He's a CPA, and again, people don't believe me, but my CPA, my dentist, my heart doctor, my chiropractor, and my plumber, and my mechanic are all clients. And the reason I say that is because they tell me what they do, and I tell them what I do. And if I'm doing business for them and I'm feeding their family, they're going to feed mine. Yes?
Right. Makes sense. I agree.
You got to have balls to say that. Now, they might have an advisor. That's fine. But if they don't, you're going to be the advisor. Yes?
Great. That's a great marketing, lifestyle marketing. I love it.
So we had a CPA call up, a friend of mine, client of ours, somebody else taking care of him in the office. And he called me up and said he's got a Prudential policy term getting ready to run out. And I called you and I said, what do we do with it? Do we put it with Prudential? We got to put it with Prudential because it's their term. So you can't roll it anywhere else. But what should we do with it? So tell me what you did after I give it to you and what we ended up doing. And you ended up doing me a favor and talking to the client. Yes?
Yep, exactly. So, well, in that scenario, it was interesting because, one of the benefits, we looked at term sales earlier and it was, 13, 15%, whatever it was. But one of the benefits of term, and in this particular case, it had conversion rights. And this gentleman, his health was not bad, but it certainly wasn't as good as it was 20 years ago when he purchased the policy. So we looked at maybe writing him a new policy, whether it be a whole life or IUL, but we could not match the performance of converting that term to a whole life policy, guaranteeing that death's going to be there when that client needs it. And we did it all without any underwriting, and we did it all that made it super easy for the client to understand. He had options. He could do the $1 million or the $500,000, but we made it super easy for the client. We converted that term. He's going to pay premiums for another 10 years, then he's done. And that death benefit's going to be there no matter how long he lives. And that's exactly what he wanted. And so we were able to do that by.
Here's how we won that case. There was another Prudential agent in the middle of it, and his premium was $50,000 higher because he was going after commission. Yes?
Yep, it's what it looked like to me. I'm not going to accuse him of that, but based on what I saw, that's what it looked like.
I'll tell you what he was doing. Loser!
Exactly.
But I knew what he was doing. And I showed the client, same company name. Why is he doing that? And he said, probably just to pat his own pocket, right? And he had no loyalty to him. And it was obvious the agent had no loyalty to him.
Yeah, exactly.
Loyalty to me. That's how we got the case. Even though I haven't written business since 2009, they knew who to still get a hold of. Yes.
Yeah, exactly. And that's that's a really illustrates the point of, we're agnostic on the product. I love whole life, but I like IULs too. But we're going to, at the end of the day, it matters, are we doing what's in the best interest of the client? And so that's what we want to accomplish. And whether that be whole life, term, IUL, you name it, that's the route we're going to recommend.
Let me, and I know you did me a favor, but let me ask you this. Would you be willing, if somebody needed you to talk to their client, to talk to their client?
Well, sure. I talk to clients all the time. A lot of times.
So I wasn't special. I mean,
well, a lot of times people will bring me in as the expert so that they're sitting on the side of the table with the client. And so they're the partner and I'm presenting the product. Sometimes that takes some of the pressure off the client. Sometimes it makes the advisor feel that they're on the client's team and they're not trying to pitch the product. I'm there to educate them. I'm there to show them the benefits, and I'm willing to do that anytime somebody needs it. If they got a case they're working on, they can always reach out to me.
I'm gonna do you a solid. Anybody that has a case right now as we're talking, that they need us to maybe help them, put hashtag Rick, and I will turn that over to you, Rick, and you can work with them or whatever. Now, even if you have an IMO, FMO, we're not trying to take you away from them. You might be with Steve DeBoard. You might be with Dresser. And I don't care. It doesn't matter. They'll help you too. If I know you're with them, I'll tell you to go talk to Steve. Steve's a genius as well. And so you might. But if you don't have that opportunity and you don't have somebody helping you and you'd like to have a second opinion, just put hashtag Rick. We'll probably get a handful of those. We always get people wanting to know. But the other thing is, Rick, is that a couple of things that were being said is that, people want to understand, when you're doing like the group stuff, and they don't have a 401k. I will tell them this. It's a lot easier to get in there. It's a little bit harder to move that 401k and bring that in. That's a little bit tougher thing to do. But it all depends on how much you can get the owner to understand the power of that. Yes?
Right, for sure. And there's some great strategies out there. One of the best ones that I run across that uses life insurance and annuities is a cash balance plan. And using a cash balance plan for businesses is one of the best ways to help the owner reduce their tax bill and save money for their own retirement while providing their employees with some benefits too. So if you know any business owners that complain about paying taxes, we have some great strategies for them, show them how to help. And it's a great policy. They're fun to do, great education. So if you have business owners, reach out to me. Let's talk about how we can help them as well.
Well, I'm looking in the book here. I have a thing in my book here that's in the book. And it's a credit card. It's a 401 credit card versus an IUL credit card. And what that credit card shows people in the book, and a couple people wanting to know how to get the book. I think Drew showed everybody to just go on to LCI, whatever. Also, if you want to get with me and do a free coaching call, I give one to everybody that's watching. So if you want a coaching call with me, make sure Drew's going to tell you. I think Zach has it on the ticker there as well. Or just put hashtag coaching call and we'll get a hold of you. But and I did 3 of those this morning. I do about 7 to 15 a week. It all depends on what we're doing. But I did 3 already today, and 2 of them I helped them with group sales. They're trying to figure out. That's why I was glad about this tonight, because this really opens people's eyes and how they're doing. And I know we're running out of time. I always like to go a half hour. We've gone a little bit over, but and again, it's because we've got some good stuff to talk. If it's Joe Clark, I cut him off early. Cut him off. No, I'm kidding. Joe did a great job, and he's going to come back in a couple of weeks, and we're going to do a great job. But in the book, and the book's, like I said, it's got a tale of 2 participants. That's the very first chapter, and that goes a 401k against the IUL, apples to apples, 2 35-year-olds putting in $6,000 a year, and it shows you what happens, and it's a good little example. But people want to know how to get the book. Like I said, just you can download it for $8, I think it is. You can get both books. I also have a book, the second book in the series of the Babe Ruth Bucket Miss and Truths, Reverse Mortgage and Reverse Purchase. So you can get both books for $2. For $10. So you get one for 2. But and the third book's coming out. Zach and me are working on it. There's 4 in the series, Rick, and you'll understand why in a minute. The other book is Truths and Myths of Tax-Free Retirement, and the other one, is on estate planning failures. The 4th one is on evading taxes like Trump. I'm going to use that name because for some reason Trump's got a big name, and it'll help me with the book. But the 4 books are for 4 reasons. One's for agents, one's for real estate and mortgage brokers, one's for estate planners, and one's for tax people. But they all sell what? They all sell whole life or IUL. Yes?
Mm-hmm. Correct.
And so the other benefit that we're doing is we're also offering this brand to agents to use. One of our guys, Aldo, he's got a son with special needs. So he's doing a book that says the Babe Ruth Bucket Myths and Truths of Special Needs Funding, right? And so that's what that whole book will be about. And here's where me and some of the big guys argue. I'm putting Aldo's name on it. I'm doing the intro, right? So it's just Aldo's name. Now I get it, and I love Tom. Tom does a shared book. I know Bennight does some shared books. I know that Tracy does some, all those big names, right? Yeah. But here's my thing. If I do a book with you, and everybody knows Rick Bennight, and they don't know Leo, they're going to know you wrote the book, yes?
Probably.
And if all I'm doing is trying to make this into a business card, I don't need to be a bestseller. I hate people that go to Amazon and they have everybody buy them for 8 cents in the middle of the night, and you sell 1,000, you're a bestseller. Bull crap. Right. We don't know how they do it. If you don't know, I just told you how they do it. You don't need to have any of that on there, right? It's just a business card. So when you give those out at your seminar, you sign it. How much more powerful is it if it's just your name on the front?
For sure. Yeah. Once again, credibility and subject matter expert. That's really all we're trying to convey. Whether what's in the book does not matter. That's we're trying to convey that credibility.
And I learned a lesson in 2015. It cost me a lot more than they told me. I'll give that credit to Tyrone. Oh, it's only going to be. It was a lot more money than it turned out to be. But we do this for $5,000 with our paid members, right? $5,000. Here's what I did wrong. I went out and bought 3,000 books for $2 a piece. Right? So I could get 3,000 books, right? 230, whatever it was. Now you can do these only on demand. Right. So it saves you a lot more money. Yes?
Mm-hmm.
I know we're going a little bit off subject, but I can see you doing the book, Myths and Truths by Rick Bennight on the whole life and IUL. You know what I mean? I can see it happening. So, but anyway, I digress. But I always like to tell the guys that there's so much more out there that we do as a group. And I know you love what we're doing. I know we're going to have you back. I know I want to get you to do something for the paid site just for our paid members, and you can pick whatever you want to do. But I think if we dabbled in this a little bit more, I think people would be not only probably taken back a little bit, but educated, because this is one of the things I don't think is taught enough. That I really don't. And we're old guys. I mean, I'm not saying that we're ready to be put out to pasture. But what I'm saying is that I think we can agree that the new generation in our business, first of all, they don't put enough time in. They're just working part-time. And secondly, they're working just for money. They're not working for the client. And I think that's going to hurt the industry on several fronts. Yes?
Yeah, I agree. 100. Couldn't agree with you more, Liam. I think it's exactly right. That's who we need to help. Focus on those younger guys. Make sure they're doing the business right. Make sure they understand and try to help them grow and get better.
Well, I'm gonna let you have the last word. Thank you for coming on. Like I said, this was awesome. I know the replay will do well. I just think it opens up a lot of eyes with people, and I think that the one thing I hope they get out of this too is that don't get back to doing group sales. We need to get back to that. That's a big moneymaker. And guess what? Guess what, Rick? There's no competition out there.
All right, exactly. Well, Liam, listen, I want to thank you for having me on. I really enjoyed our conversation. I'm really thankful for you and everything you're doing to try to help. The Babe Ruth bucket system for agents, I think, is an excellent tool. I think if more people use it, they would experience more success. So I appreciate everything you're doing, trying to educate, those in the business that maybe need a refresher, as well as those new agents. Thank you for having me on. Enjoyed it. Look forward to working with some of you guys. If there's anything I can help you with, reach out to Liam and he can connect us. And I hope everybody has a great afternoon and great evening. And we'll look forward to seeing you guys again.
And Zach's going to put on what's happening next week. Let him have it, Zach.
Next week, we welcome our special guest speakers, David and Ellie Denning. David and Ellie help insurance agents double their production, fire their lead vendor, and ditch smiling and dialing forever through organic marketing strategies.